What's going on, guys? This is Carlos, CEO of G.A.R Capital. Next YouTube video, we're going to talk about something everyone I know for a fact has issues with. This is trader psychology. We had a podcast on this, so again, if you want to kind of a little more in depth, you just want to listen, you don't want to see this video, check out the podcast, G.A.R Capital podcast on Spotify, Anchor, and Apple Podcasts. So take a look. Today, we're talking trader psychology. You got this, Snake?
Got it.
All right, trader psychology. So again, you're not here for my handwriting. You're here to talk about trader psychology. So again, it's all about here. It's all about here. You can have all the knowledge in the world. You can know text. You can know numbers. You can know earnings. You can know trends. But without the correct mindset and psychology, you're not going to be successful in this business. It's just period. End of story. So again, we're going to talk about a couple of tips that I have, that I've been trading here for years now, owning this company, running how many clients around the world. We have great traders under our company. So again, these are the things that you want to know, things you want to practice on a daily basis. So the first thing you got to know, first of all, you got to know what the hell you're doing, meaning you got to plan. Plan is number one. The hell, you got to have a plan. You got to know where you're going. You got to know where you want to go. So again, you want to make this down. So we're going to go ahead just for educational purposes or for example purposes. We're going to pretend that you have a 10K account. $10,000 in your account, right? You say, hey, you know what, Carlos, I think I'm ready to trade. Let's rock and roll. Cool. $10,000 is what I have in my account. So first thing, we're going to pretend that you're trading options, just for illustration. So options trader, no commodities, no Forex, no futures, options. So you have $10,000. So again, first thing I want you to, before the planning, $10,000 here. If you lost this money tomorrow, or in a month or in a year, would you lose sleep? That's the first thing you should ask yourself. If your answer is no, then that's your amount. If your answer is yes, you need to bring this down because you have to make sure that the number is correct for you. Again, it's all relative. I don't know how much you make. I don't know how much you have. But this should not be your emergency fund. Should not be your rent. This should be money that you're looking to speculate. This is not an investment. Investment is completely different. We've had videos on that. I'm talking about speculation. You want, I hate to say the word quick cash, but quicker cash. So again, we're going to pretend options trader plan. Okay, so what's your plan? What's your goal? What do you want to accomplish? So I want to know what the goal is. And it should be something where you feel that you can achieve, correctly. I'm not going to sit here and say 1 year I want to turn 10,000 to a million. That's not happening, man. This is not the lotto. So again, let's kind of plan it out. So let's say in 1 year, I want to double my money to 20,000. Is that possible? Yes, it's possible. Is it difficult? Absolutely. But again, it can. So again, I want you to write down your goal. What are you trying to accomplish? 1 year, 365 days, obviously there's less trading days. There's 5 trading days in a week. There's 52 weeks. Someone give me a calculator. I got a calculator here. Where's your phone? Follow me. Follow me. Take a look at the beautiful view of Brickell in Miami, Florida, while I get my calculator because I'm lazy. 5 times 52 is 260 trading days in the year, give or take. Trading days, right? So in order to get where I'm going to be, I have 260 trading days, right? This is our plan. So 260, right? And we need to make 10 grand in order to hit our target. How are we going to get there? What do we need to hit daily in order to do this? So $10,000 divided by 260 trading days, give or take. We need to be making $38 a day on average profit. That doesn't seem so much, does it? There's a great book out there. I think it's Who Moved My Cheese. I don't know if you read that book. It's a great book. It said, how do you eat an elephant? 1 bite at a time. So we just broke it down here, okay? 1 year, we're gonna make $10,000 to double our money to 20,000. So how do we do it? There's 365 days a year. You don't trade every single day. 5 trading days a week. 52 weeks equals 260 trading days. 260 trading days divided by 10,000 is 38. We can go ahead and confirm that if you like. 10,000, if you're playing at home, divided by 260 trading days is $38.46 for profit, $38 a day. That's our goal. So let's go ahead and break that down again. Again, we're under plan still. $38 a day times 5 a day times 5. I'm lazy, bear with me. It's $190 a week. Now, it doesn't have to be to the T. $190 a week times 4. In a month, $760 a month is your goal. Again, as an example. Doesn't sound like a lot, does it? Doesn't sound like it's, oh my God, insane. That's the plan. We got the plan down. Now, we're gonna talk about the really key, discipline. The most unsexy advice ever. Patience and discipline is the hardest thing to teach people. It's something that we really, really reiterate. But again, it's not much of a plan if you don't stick to it. So again, these are your numbers. 38 a day, 190 a week, 760 a month. So what does that mean? Let's say you had a great day, really great day, and you made $1,000 for the week. Oh my God, Carlos, $1,000 a week, I'm gonna go pop some champagne, blah, blah, blah. Made $1,000 a week. Okay, that's 10%. 10% from your 10K, right? That you made. Oh, definitely possible, right, Nick? Definitely possible.
Absolutely.
So $1,000 a week. So what do you do now? And then you got this on a Wednesday. Let's say you got this today on your weekly trading. $1,000 for the week. What do you do now? Do you keep going? Stop. You stop. You're done. Done. Shut off the computer. You're done. You should be no more trading, no more analysis. Move on to the next day and not tomorrow. Or actually next week, because we're broken down. So I'm gonna make the analogy here that I tell a lot of people. In football, I'm pretty sure there's a lot of football fans here. Let's say you watch the NFL or college football. First down and 20, they get the kickoff, they're in the 20, 25 yard line, whatever. Does the quarterback every single time go for a Hail Mary pass for a touchdown? No, they don't. What are they trying to do? They have 4 chances, 4 downs to hit what? A first down. Again, inkling by inkling to go down the field. Time of possession, they want to go through the whole 9, right? This is your time of possession. These are your first down markers. First down, midfield, touchdown. In the year, ball game. Hey, what if you made $10,000 in 3 months? Are you done for the year? Yes, you're done for the year. You're done. You're literally done for the year. What you can do, let's say if you made $10,000 in 3 months from your plan, and now you have 20K, now you have 20K in your account for 3 months. What do I do? Oh my God, Carlos, am I done, really? Well, that's really up to you. So what you can do is take 10% of that money and you can trade it and keep going. I would recommend 10%, keep the rest. So again, 10%, that's only $2,000. You still have 18K, still happy, and then you still keep trading there. But you hit your plan, you hit your target, you hit your goal, you're set. Now again, are these extenuating circumstances? Does this happen all the time? No, but again, the plan is the key. Once you hit your target, you need to step away from the computer, you need to step away from what you're doing and have some gratitude on the killer time that you had, and just go on from there. And just like anything else, guys, there's winners and losers, right? So, let's flip it. Back to the plan. You have 100K. How much is your drawdown? How much can you handle? How much can you handle in loss? Excuse me. But 100K, sorry, 10K. I don't want you to lose more than 5% in a week. That's a pretty big loss of equity. That's the most I want you to lose. Now keep in mind, when you're trading options, I always do the rule of 1 to 4% equity. We usually do about a 74% win ratio? Nick?
I think a little bit better than that.
I would say 74% plus, if not around 78%, give or take.
Right, this week I believe
This week we're at 89.
89%.
So pretty good. So again, 1 to 4% times 74% win-loss. Again, if you're doing things correctly, and you're staking your 40% like we usually talk about, 40%, include your runner strategy we have. If you're interested in that strategy, take a look at the podcast, take a look at our videos, G.A.R Capital Training.com. You should be solid here. If you have a bloodbath of a week, let's just say nothing hit, you got 0%. That has never happened to us. The lowest we've ever had in a week, I believe, was 47% win-loss. That was the lowest we ever had. Leave 42, 48, fine. Let's say you had 0. You didn't make any trades. All trades were 0. Crash. Just disgusting. The max you should be losing is 5% on that week. Max. If not, 10. And that's when you need to be pulled away from the computer and stop. Do not revenge trade. Revenge trade is that you're pushing to get that. In the casinos, people, what they do, for example, my uncle, He's the type of guy, well, he'll spend $100 to win back his 40 that he lost on the blackjack table. And of course, the casinos will love for you to do that. But again, as an example, you don't want to do that. You don't want to keep pushing. You need to step away and let the market come to you. So again, if you hit 5 to 10% for the week, and let's say you had a horrendous week, stop. Stop trading, done for the week. And you move on, come back fresh on Monday. One little trick I like to do when it comes to losses. We're gonna talk losses now. And I hate talking losses, but it happens. Number one, why do losses happen? Number one reason, no patience. Number one. They see red, they freak out. They see green, they really freak out. No patience, number one. Number two, over leverage. Positions too large. So, give you an example. You got a 10K account and your trade is only $100 and you lose, you're not losing sleep, right? If your trade is $1,000, how you feeling? One is 1%, one is 10%. You should never be in this category. That's playing the lotto. The worst thing that can happen to you if you trade 10% of your portfolio is if you actually get it right, because the bad habits don't change. Bad habits, they don't change even if they make them correct. I don't care if you made money, it's still a bad habit. 1 to 4%. So if you have 10K, $1 to $400 is your position size, 1 to 4%. That's what I want you to be in. So that's number two. Number one, no patience. Number two, over leverage. Number three, not sticking to the plan. What does that mean? What do I mean not sticking to the plan? You're not watching your charts. You're not looking for breakouts. You're not looking for volume. You're deviating from your plan because you're desperate. You want the win under your belt. Remember, break it down. First down. If you don't get a first down in 4 tries, what do? You punt the ball. You don't score every play. Even the Patriots don't score every play. They're the team that won the Super Bowl. Okay, how many punts were in the Super Bowl this year? It was all punts, right? But they still won. Think of the long-term game. Stick to your plan. Be disciplined. The number one here is no patience. Number two, over leverage. Number three, not sticking to the plan. You need to stick to those deals. Again, it's very, very crucial. If you don't have a plan, failure to plan is planning to fail. Just so you know. I'm going to read that one more time. Failure to plan is planning to fail. Period, bottom line. I don't care what you do. I don't care if you're building IKEA furniture or you're trading big money. It's the same deal. So that's losses. What do you do when you have a rough week? That's a very good question. A lot of people ask me that all the time. Rough week, what do I do? Number one, trading journal. You need to have a trading journal. See exactly where you are. We use Excel. We track every single trade, exactly what we did, where we got out. We do it every week for our guys. We send it out a screenshot. Trading journal, very key. Very, very crucial to know where you came from, where you're going, how you're doing. You can back test everything. Write it down, everything you do. If you work out, let's say you're big into working out, I'm pretty sure you write down your reps, you write the weights of your bench press, your squats, your deadlifts. It's very, very key, right? Number two, instead of trading journal and you're having a tough time, demo. I say this all the time. Demo trading is literally an empty basketball gym and you're practicing. Practice, practice, practice. Practice makes perfect. Once you demo, I know a lot of people, I've heard this many times, Carlos, I've demoed and I'm crushing it, but when I go live, I fuck up. Why? Because you're nervous when it's real money. When it's demo, you're not freaking out because it's fake money. But again, take away the emotion out of it. You need to trade like a machine. Stick to the plan. Sticking to your plan keeps your emotions in check because you're just going with exactly what you're doing. You're going exactly with the levels you're going through, the trading you're going through, the exact trades you want to go through, the volume, the charting, yada, yada, fundamentals. So again, demo. And number three, this is a weird one, but I'm going to say it anyways. Reward yourself. I do this all the time. What I would do if I had a rough week, I would reward myself somehow. Do something nice. Go out for dinner, something where you place you really like. Go buy yourself something nice. Don't go crazy, obviously within your means, but again, reward yourself. Be good to yourself. Don't be so hard on yourself. Again, this is a very difficult business. It's very difficult. So again, it's very, very easy to just beat yourself up. Again, it's all confidence. So again, reward yourself, confidence. Again, there's one thing I can guarantee in trading is that you will lose. Guarantee that. You will lose one way or another. You will lose, but again, how you bounce back. So again, number three, reward yourself when it comes to losing. Next pick I want to send, or next thing I want to say. Number four, it's not what you make, it's what you don't lose. How many times have you heard this before? A millionaire who's won the lotto, or an athlete who signed a big contract, they go broke in 3 years, 4 years, 5 years. Or the 10 years, they go bankrupt in 10 years. How's that? It's not what you make, it's what you keep. It's what you don't lose. It's what you keep, let's just say. So again, you can make killing trading. Of course you can. You can hit that Boeing short right now, about 420. You could buy that S&P in December bottom. You could have done it. You could have shorted whatever you want to short. You could have shorted Enron back 10 years, 20 years ago. Okay, or you could have shorted the banks 2008. What do you have to show for it? Did you lose it? Probably. If you didn't have a plan, if you didn't have patience, again, it's what you don't lose. Long-term game. The market's not going nowhere, guys. Forget looking at week to week or day to day or minute to minute. Years and years. Is this sustainable? Can you do this? A lot of people have told me, I want to trade for life. I want to keep doing this for the rest of my life. I say, great. Okay, so what's your plan? A goal without a plan is what? A wish. I don't want you to wish to be a great trader. I want you to be a great trader. So again, it's not what you make. I don't care how much you made at last trade. What did you lose? What do you have left? What you keep? Does that mean keep it all in savings? No. But I mean risk management. So again, we're going to talk about risk management here. That's our segue. Risk management. Every trade, 1 to 4% risk portfolio. This is not negotiable. This is not negotiable. This is not negotiable. You zoom into this, Nick? 1 to 4% risk. I don't want you to change that. Again, I want you to pretend like this is the Coca-Cola formula. Coca-Cola tried New Coke back in the 80s. How did that work out? It sucked. Coca-Cola Classic, risk management classic, 1 to 4% risk management. And if you do things correctly, it'll just increase anyways. As earn your way to trade higher. Don't just trade your way higher. I always say people that trade too high of a risk is like trading with a credit card. You're just gonna get crushed. And just because you have available money doesn't mean you should. If you have a credit card, should you max it out every month? No. If you don't need it, don't need it. Again, risk management correctly. You don't have to go a Hail Mary every single time you trade. Very, very crucial. Very, very crucial. Then risk management. Talked about losing. What you make, what you don't lose. Now, here's the fun part. We're gonna segue here. The word patience, right? Everyone loves that word, patience. I tell this to my guys all the time, they hate me for it. Patience. The hardest patience is the one you win. That's where you have it. Winners. Oh God, how is this gonna happen? How is this gonna work? Okay, so let's say you have a winning trade. Let's say, for example purposes, you have some QQQ calls, the 172s, and you say, oh my God, Carlos, I'm at 40% profit. Woo, I am happy. I went my 1 to 4%. Carlos, I am happy. Now what do you do? Okay, so this removes FOMO. We've talked about this many times. So what you do is you take, let's say you have 5 contracts of this. I want you to close 4. Leave 1, what we call a runner. Move the stop loss to break even, which is your entry level. And you're gonna let it ride. Now again, this is where you have to understand and control yourself. Do not do this if this is passive and you don't have the time to look. If you're in front of the computer, yes. If you're working full-time or whatever, I want you to just get the hell out of the trade. But if you have some time and you look in front of the computer, watch it, watch it. And you're gonna look into your 100% level, 200% level, 300% level, 400% level. Again, if you have a bull run. If we are Wednesday through Friday, Wednesday to Thursday, excuse me, on the same week, I want you to look at only 100 and get out. These are only meant for Monday through Wednesday. Same week expiry. 200, 300, 400, 500 plus. If it's Monday through Wednesday, you can go for these. If it's not, if it's Wednesday, Thursday, or Friday, you get out 100. I don't care what the hell happens. Get out. Time decay is going to crush your option anyways. So again, Wednesday to Thursday, the closer we are to Friday, I want you to keep it closer. If we're early in the week, Monday through Wednesday, 200, go for 1,000%. We call them bags. Bags, right? I love it. So that's where we are. Again, discipline is the key. So when you do, and you hit your numbers, and you hit your weekly goal, you need to pull away from the market. Euphoria will get you. There's a really good saying I've always heard. It's never make promises when you're happy. Never make decisions when you're upset. I don't want you to promise the world when you're happy. I want you to get out, enjoy life. Don't reward yourself with anything yet. Only reward yourself when you lose. So again, you still have that psychology of feeling good. But again, the winners, when you have them, pull yourself out, enjoy the rest of your day. knowing that you had a really, really great week or a great trade. And again, I want you to always focus on psychology here. Focus on winners. Focus on what you did right. Don't focus on what you did wrong. You're always going to be wrong. Being wrong will always happen. You'll be there. But when you get it right, I want you to focus on that. Really focus on that feeling of winning, of getting those trades right, because you want that to compound. The more you focus on something, the more it'll appear. I know it sounds really mumbo jumbo new age, but it's the freaking truth. It's called your mind. So again, winners, 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 winners. Focus on winning. So again, if you had 5, let's say 8 trades, and you had 6 winners and 2 losers, what are you gonna focus on? I want you to focus on the 6 winners. Let's flip it. Say you had 6 losers and 2 winners. I want you to focus on the winners. Losers are gonna happen. It's like crying about the rain. It's still gonna sunshine tomorrow. 2 winners. I want you to focus on these and the feeling that you got. You will bounce back. The market's not going anywhere. The market, I always say, always gives you opportunities, guys. So again, I really hope this helps. This is basically trader psychology. A lot of good information here to make you a better trader. Again, guys, don't be tough on yourself. You can do this with the right mindset. Have the right mindset. Every single day you wake up, you need to remember, you're gonna get a winner in your belt, you're gonna make some money, and if you don't, you move on. We will live to fight another day. This is G.A.R Capital. Thank you so much for taking the time. Have a great rest of your day. We'll catch you guys for the next video.